Russell Investment Group's Andrew Pease sees less pain but also less gain for all stocks this year, and he joins us from our Sydney studios. Okay, Andrew, so you got to explain that. You see less pain, also less gain for Australian stocks. Why?
I wouldn't say I'm bearish on the Australian market, but I'm finding it really hard to be bullish, and I think there's probably better opportunities in other markets this year. And I think less pain, less gain is the theme. We had less of a downturn here, didn't have the recession, so there's really less cyclical upside in economic activity and in profitability, and the market's already trading at a reasonable premium to other developed share markets around the world.
Okay, so why don't you give me a gauge here then, Andrew, because earlier we talked to Martin Lakos of Macquarie Private Wealth, who says maybe the ASX is going to hit 5,600 from here, which is 22% upside. The floor support firmly at 4,500. Do you agree with those terms? Obviously not the high side, but how about with the floor?
I think the floor, I think if I torture my spreadsheets long and hard enough, I can convince myself that the fundamental value for the market is somewhere between 4,500 to 5,000. But I think a point to keep in mind when you're looking at index levels on the Aussie market is that Australian firms issued over $90 billion worth of shares last year. So there's a very significant dilution effect of between 10 to 15% on the Australian share market, and you have to take that into account when you're thinking about what sort of levels are achievable.
What sort of levels are achievable, Andrew? Because we are in the midst of earnings season right now. In fact, there's lots of names coming to market with their numbers, and the consensus forecast is for a 15% rebound in EPS over the next 12 months. So, what's your opinion of corporate earnings? Are they going to give the results that we're expecting?
Yeah, I think the 15% number seems pretty plausible, but when you look at the numbers for the US and for the developed world, there the consensus is for close to 30% earnings, and I think that's the difference in the story. So if you think that price to earnings ratios have overshot a little bit, which looks like they have in anticipation of the earnings rebound, then that's really the sort of return differential that you're looking at between Aussie shares and shares in the rest of the world. And I think, again, it goes to that point that we didn't have the earnings recession that you saw in the rest of the world, so we really don't have the earnings upside.